All right, let's go ahead and begin. Good morning, Checkmate crew. It is 30 minutes after the opening bell of the New York Stock Exchange. It is 10 a.m. Eastern Time on this November 22nd. Today is Tuesday. Yours truly, Mickey Blindside, here with your market memo. All right, let's go ahead and take a look at what's going on in the markets. First off, okay, today I wanted to reinforce some of the investment themes that we're investing in. You know, from last week and the week before, we went over certain themes. Today we're just going to continue that. But before we do that, let's just go over what's going on in the general markets. SPX, S&P 500, it has been rallying. It's pulled back just a little bit. We closed right around in the middle of the delta neutral zone for the monthly November OPX, which was last Friday. And now we're in this kind of low volume holiday week. It is Thanksgiving here, Thanksgiving week here in the United States. Thursday will be Thanksgiving. Markets will be closed. Also, remember, guys, on Friday, it's a half day. All right, so the markets will be closed at 1 p.m. Eastern time. So keep that in mind as you plan your trades for this week. Okay, just real quick, our internal data. All right, again, just so that we know what's going on here. Okay, this is the New York high-low line, all right? We have been seeing more highs over lows for the past few sessions. So the high-low line measures, you know, the 50, how many stocks in the New York Stock Exchange are making 52-week highs versus how many are making 52-week lows. If there are more highs being made than lows, it's a positive number. If there's more declines being made or more lows being made than highs, then it's a negative number, and we add it to the previous day's number, and that's how we get a cumulative line. Okay. Again, when this starts curving up, or when it starts getting above its first moving average, that is usually when things start stabling off. We could see a bear market rally that lasts a couple of weeks to about a month and a half or so. You know, the one in the end of May lasted 3 weeks. The one that started in July lasted for about 6 weeks. So bear market rallies actually can last a while. If you go back in 2000s, in the 1970s, some of these bear market rallies sometimes lasted for 6 months to a year. It's very possible. But if you want to see a 6 months to a year bear market rally, this really needs to start turning up. Okay, I don't see that yet. When I do, I'll let you guys know. But right now it is stabilizing, which means, hey, you know, this rally could last at least a few weeks. It's very possible, okay? So keep that in mind. Liquidity is stabilizing. It is stabilizing, okay? As far as the New York Advanced Decline, this is how many issues in the New York Stock Exchange, how many stocks are advancing versus declining. It is on an uptrend. So there are more advances. Market breadth is increasing. Also, you can see it here on the equal weighted S&P 500. It is trying to bust out of that range. Okay. Also in our New York, not New York, but in our junk bonds ADL, our junk bonds advanced decline line, we are also seeing it stabilize and going up as well too. So when we see all of these liquidity signals stabilizing, all right, generally then what we see is that floors get respected, put walls get respected, and then on the upside, sometimes ceilings don't mean it as much. All right. The opposite is true too. You know, when liquidity is declining, generally, you know, we can definitely undercut put walls. We can go through support, and then ceilings mean way more. You know, call walls, act as ceilings a lot better when liquidity is declining. Okay, so right now that's not the case. Right now liquidity is improving. Okay, it's improving and stabilizing. So I do think that, you know, even on pullbacks, the markets will bounce. Okay, at least temporarily. All right. Big picture though, it's still in a downtrend. If you look at the bigger trend here. Okay, and I'm still, my plans still haven't changed. I mean, I repeat this over and over again. 41.25, around the 41.25 zone, 4100 to 41.25 zone. That is where I want to start buying some put spreads on the S&P 500. Maybe like 1 to 3 months out. We shall see. But right now we're kind of in just no man's land. The risk to reward is not really in the favor of shorting right now. Okay, just a little bit more, then the risk reward becomes favorable. And again, if I'm wrong, I can just get out at a very small loss if we close over this for about a day or two, or above that 41.25 zone. Okay. And then in the same way, if the market drops and the VIX goes up to 32, I'm just going to sell at the money puts 30 days out, like I did all year. That's been a very, very good profit-making center for us for the past year, pretty much. Okay, so that's what I see in the general overall markets. Now, let's get into some of the market happenings that happened. Hey, crude oil. I mean, wow, what a reversal yesterday was. Yesterday was a huge reversal. Oil went down to $75 a barrel, $5, and then it just reversed. Okay, remember in the summer I told you guys that there was a White House leak about when they were going to buy for the strategic reserve. Well, that level is around that 75-77 zone, remember? And I said that is a buy zone. That was a buy zone here. At that time, I did not take that long. Here, I didn't take the long either because it seemed kind of scary at the time. In hindsight, I should have. Now, this is definitely an exhaustion signal. So yesterday, there was a rumor that OPEC would increase production in oil to counteract some of the drop in production from Russia. All right. That turned out to be not true. Okay. I think the Wall Street Journal published that. Okay. Right after the Wall Street Journal published that, the market just tanked. Okay. The oil market just tanked, went all the way down to that 75 zone, and then sellers got exhausted and then just pushed its way back up. Okay. Well, you know, right now, you know, in today, if I just looked in the news today, it's looking like that report yesterday was a rumor. And this is exactly why I don't look at the news when trading, especially in oil or commodities. All right. Really, it's the data, and it's, you know, right. Also, too, remember I told you guys for the December-January expiration, there was huge put walls at around 80 or so. So a lot of that open interest also, you know, that commercial paper hedging also had to do with this huge reversal, as well as just overall, you know, stockpiles still coming down. The oil just reversed, very, very much so. And I think oil continues up. All right. Just based on market positioning, just based on also the crack spread, you know, with diesel, with diesel fuels and their supplies still going down. You know, that is going to support the economics of buying crude oil to produce those distillates. Okay. And I do think that a lot of the refineries are probably done with their winter maintenance, and they're probably starting to buy crude oil again to create their winter blends. So this is around the time where they stop doing their maintenance and they start buying oil again. And so we saw that huge reversal. For our oil play, I am looking at some deep sea drillers. One of the names I'm looking at is BORR. BORR did go down all the way to 4.4 and then it bounced back up. You know, I don't know what's going to happen during Thanksgiving. During Thanksgiving, we tend to see really big moves in oil. If you look at last year, same thing. We saw a huge move over Thanksgiving. Where is it? Right around here. We saw a huge move in oil last year and during Thanksgiving. Okay, huge move. All right, it happened to be down the year before that. I believe it went up. Right here. All right, it would have been somewhere near here. Okay. Generally, you see these outsized moves around Thanksgiving just because liquidity is lower. U.S. markets are closed. U.S. markets are one of the biggest sources of fund flows in international markets. So it's very possible. I mean, I don't know which way it's going to go when it has a big move over Thanksgiving. That's why I'm kind of hesitant to put a position now. If I were to put a position now, I would do it like a small... maybe a small spread, or I may even leg into BORR, just a small initial position. So if it does undercut and then if oil does come down, I can just pick up some more shares. So that is an option that I have. We'll see. But I do think on pullbacks, that this BORR is going to be a good buy. Deep sea drilling tends to be the most sensitive to oil prices, and when oil is above that 80-90 zone, that is when deep sea drillers start making lots of money. Okay, and that's when you start seeing interest in the deep sea drilling space, especially from institutional investors. So that's part of my thesis as well too. I am trying to get into BORR. We'll see. I don't know if today, if it comes down just a little bit. If it does, if it comes down to around that 466, 460 zone, I will look to get into an initial long position in BORR. Okay, BORR, BORR drilling. All right. Another thesis I want to go into today is Chinese industrials. So right now there's some news that China may be reopening. I don't really care what the CCP or the Chinese media reports because, I mean, that might not be true. Who knows? All right. For me, it's all about the Australian dollar. The Australian dollar is a very good forward-looking indicator for China. China gets a lot of its base metals and its natural resources from Australia. So whenever we see industrial output expected to rise in China, we see a demand for the Australian dollar as Chinese companies start buying natural resources. Okay, so Australian dollar is a very good forward-looking indicator. Actually, let me show you guys the chart of Australian dollar over the Hang Seng right here. Let's see here. Let's go to AUDUSD. AUDUSD. And right here, I'm going to change this to HSI, Hang Seng Index. Right. So there you go. As you can see, it tends to be that the Australian dollar will it will move ahead of Chinese stocks. Here, even for example, in June, the Australian dollar turned down about 2 or 3 weeks before the Hang Seng did. Same thing here. The Australian dollar bottomed on October around, let's say, around 13th, 14th, 2 weeks ahead of the Hang Seng. Okay? So, again, Australian dollar is a pretty good indicator of that, and we've seen it through and through this year where the Australian dollar front runs Chinese stocks by, it can be anywhere from 3 sessions to about 2 weeks. All right, but it is a decent forward-looking indicator. Now, what I'm looking for is that if the Australian dollar, if it can hold that 0.64 zone, if it can hold that, I'm not saying that it has to come down there, but as long as it stays above there on this pullback, all right, and creates a higher high and comes back up, that I think would be a positive sign for China. Okay, a very positive sign that this reopening could have some legs to it. Okay, we will see. Where I am focusing on is not Chinese tech stocks. I do not want to be in any type of Chinese stock that has a lot of debt. Okay, so first off, I do not want to be in a Chinese stock that's in a lot of debt. I do want to be in Chinese industrials, and the industrial name that I am going to get into is ZTO Express. It is called the FedEx of China, shipping and trucking. Okay, it's in the shipping and trucking business in China. It is one of the industrial names. They just had their earnings yesterday after the market closed. Stellar earnings, beat estimates. They're increasing their share buyback program. They're going to extend it and buy more. I mean, what else do you need, right? Very reasonable debt, good earnings. Earnings are on the up and up. It's just a very good story. It goes very well with the China reopening thesis. I do think this is the name to be in if you're going to play China. It's ZTO. I like the industrials. Okay, I want to get more into the industrials. I don't necessarily want to get into Chinese tech stocks with a lot of debt. Okay, so if the dollar keeps going up, we could see a lot of pressure in servicing that debt, especially, if it's dollar denominated. I don't want to be in any property developers either, again, because that's a lot of debt. So that's why I'm going with ZTO. It's one of the few Chinese industrial stocks that has an options market with it. And I will be buying, I'm looking into buying shares or possibly going long on some longer dated in the money calls. There is a July chain. The January chain is a little illiquid. Okay. If the spreads tighten up a little bit, I may go for the January 2024, or I may just go with the July 2023, maybe even June, just because, yeah, this is a little bit tighter than July, but I mean, that's not so bad, but I am looking at in the money. I'm looking at anywhere from delta 65 to 75. That's where I want to be. So I'm going to be buying. What I'm attempting is a poor man's covered call. I'm trying to buy a deep in the money, longer dated call option, and then I'm going to start selling out the money, shorter dated calls against it. Okay, to bring down my cost basis. All right. So that's what I'm going to attempt with ZTO. I am looking for a pullback in this. And plus, again, it's Thanksgiving week coming up here. So we might see a little bit of lower liquidity, especially in the currency markets. And currency markets have been moving quite, with some volatility. So we might see the Australian dollar pull back around the 6.4 zone. And again, if we do see that 6.4 zone and it holds and it comes back up, I think that's a very good sign that China is the reopening story is definitely possible. So I imagine that if the Australian dollar pulls back to 6.4 or so, we might see ZTO pull back as well too. Maybe about here around the 19 area. So when it gets to around this 19.5, $19.50, I definitely am buying those longer dated calls on ZTO. Okay, so that's part of the thesis on China. All right, so guys, over the past week and a half, I went over, my theses on what I want to invest in going forward for the end of this year into next year. Okay, I'm really bullish on metal mining and especially uranium. Okay, and out of all the metals, I'm in the order of where I want to focus on from more to less. Uranium. I mean, uranium. Uranium is where I think we're going to see a lot of gains for the next 3 to 5 years. So uranium, platinum, silver, then gold. Okay, that's the order in which I want to look at metals. That's just me personally. You don't have to follow what I do, but that's just what I'm going to do. Uranium, platinum, silver, then gold. All right. After that, that's going to probably have my highest weighting in my speculative portfolio. After that, what I'm looking at is deep sea drilling, oil and natural gas tankers, food commodities, Chinese industrials. All right, those are going to be also part of my speculative portfolio as well too. They're going to be less weighted than the metal mining, but still nonetheless they will have some significant size in my portfolio. Okay, so that's where I'm really focusing on for the next, let's call it for the next 3 to 6 quarters. Okay, that's where I'm really going to be focusing on. Speaking of platinum, how's our platinum name doing? Oh, wow, it's up today, 4%. So we'll see. I mean, metal mining also, Australian dollar also is a very good forward indicator for metal mining. So again, if that Australian dollar pulls back to that 0.64 area that we're looking at, we might see the metal miners also come back down a bit too. At 141, 145 zone, that's where I want to be buying PLG, platinum group metals. And I already went over the thesis on that last week. Low debt. They're also in battery technology as well too. A very great story overall. Also goes with the reopening story in China. China consumes a lot of these metals, platinum, palladium. There are a lot of it is used for car parts, especially EV car parts. So again, very good story to be in. So platinum, definitely looking at that. Silver miners, let's just take a look, go through all of our thesis names. I mean, it looks like it could reverse. We'll see. We'll see. I do want to pull back. This is not a big enough pullback for me. I really wanted to see something like 25, 26 to get into the silver miners. GDX tends to have the better levels just because this is the more liquid of the mining ETFs. Definitely was looking at, around the 26 zone, but it never really got back that far. It breached 27 and now it's coming back up. I'm guessing gold is up too. Yeah, gold is up. Not as much. Is the dollar down today? The dollar is down today, hence why that's the case. Okay, so that's we'll see what happens. Again, Thanksgiving week, we could see a lot of big moves. We could see a lot of big reversals. Very unexpected moves happen. So, if you guys are swinging over Thanksgiving holiday, keep your position small. There's no need to be greedy about this. It's going to be a big swing. You're going to either, with small positions, you can make big profits. There's no reason to go greedy and go, with size over Thanksgiving. Okay. But that's the miners. FLNG, which is our natural gas tankers. I mean, oh my goodness, we were waiting for that 30 zone and it never got there. It teased it and it looked like it was going to go and then it just reversed so quickly. This was such a huge reversal. We'll see. We'll see what happens. I'm very, very bullish on natural gas tankers. I think natural gas, right now, natural gas market, it rallied hard yesterday. I do think natural gas keeps going up. For the years to come, we might see, something like, in the 2000s where, there was the initial wave and then it just kept going up for the years to come. I think that's what's going to happen here. I think we might see the highs being retested at some point in the years to come for natural gas. And that will just make the freight charges for natural gas that much more expensive too. This stock wasn't around then, but if you look at some of the other oil and gas tankers at the time, I mean, they did phenomenally well. Their profit margins grew, and their stocks did multiplied, 5, 6, 7, up to 10 times. So I'm not saying that's what's going to happen to FLNG, but I think, with freight rates going up and with the importance of natural gas as part of the energy security for a lot of countries, I do think FLNG is also going to be able to profit from that and possibly even increase their dividend at some point in the years to come. All right. So I am bullish on this. I am looking for an entry in this too. So hopefully we see a pullback over Thanksgiving or, over the course of the next couple of weeks. I am going to be buying here. Okay. Part of our thesis was also food commodities. I'm very bullish on price of chicken because I'm bullish on the price of beef. When beef goes up, chicken and pork goes up too as an alternative proteins. I've been talking about the food commodities thesis for a very long time, since July or August. You know, we got into PPC a little bit early, but you know, we got in. And you know, this was due to the all the cattle getting slaughtered in the United States. You know, they got slaughtered very young. There was a huge there was a lot of cow ranchers that decided to slaughter their calves because it was too expensive to raise them to maturity. So, you know, the water costs, feed costs, all of these things contributed to that. And so we saw a record number of cattle slaughtered and auctioned off to the wholesalers, you know, the big four, JB, you know, Tyson, you know, those names. But at the same time, all right, cattle futures in the paper market have not come down at all. All right. So a record number of sellers, yet the paper market still keeps going up. Well, here's the thing. I think there's going to be there's a huge disconnect here. All right. I think margins, and we've already been seeing it. PPC in their last earnings, they came out with stellar earnings, even though the volume of chicken they sold was only like 1 or 2% different than previous years. Their profits grew about 18-19%. All of that was pricing power, okay? And I think a lot of the beef wholesalers, you know, like Tyson and all that, they have huge pricing power in meat. And I think as the years go by, because of all the calves that were slaughtered this year, there's probably going to be less cattle producing calves in the years to come. Beef supply, I think, is going to drop. Beef prices will go up. Therefore, alternative proteins like chicken and pork will also go up too. Also, right now, we're having this case of avian flu. So I don't know how that's going to affect the margins of PPC. But again, if the supply of chicken just goes down, I expect margins to go up even more so from that. But I do think this is a multi-year trend. And so PPC, it is coming back up. We're almost break even now in PPC. I'm almost to the point where I'm going to start selling covered calls. If it gets into that 28 zone, near 28, I'm going to be selling covered calls on this pretty soon. I'm looking at about, you know, a month or two out. You know, we'll see January's right now. I mean, that's a pretty decent yield. If it goes up $2 more, you know, then I could see this around the 30 strike getting to around 50 or 60 cents. You know, that gives me a good 2 or 3% every month of yield. That is not bad. So again, I'm looking to sell some covered calls above my cost basis on this. PPC is a very good story to be in right now. Again, about 2 to 4 year hold on this. I think this is going to be a very good story here. I think easily with profit margins increasing in about 2 or 3 years, this could bust above that 38.40 resistance. And we could see this stock, you know, I think into the 50s in about, you know, 2 or 3 years, which would be, you know, a 100% return, profit return for 2 or 3 years, which is a phenomenal rate of return for holding a stock, you know. So we'll see. At some point, maybe they even introduce a dividend. That would send this stock soaring. All right. So I think this is a very good candidate to actually pay a dividend at some point as well too. All right. Any questions? Anything you guys want me to look at today? Voice, chat, text. Any concerns about the price of uranium with regards to the Defense Appropriation Act, aka the Fed government dictates the price and amount they want for national security reasons? Actually, very good point, Ari. Okay, so yeah, actually right now the Department of Energy is going through bids right now to buy. The Department of Energy is looking to buy uranium right now, and the uranium name that we're in, the Quad U. Every time I say UUUU, somebody says that I'm making baby noises, but I'm not. It's just a ticker symbol. It's Quad U. But anyway, they are one of the top contenders to get that contract. Okay, so the Department of Energy and also, you know, the U.S. government has signaled that they are buying uranium. They are buying to increase their supply of it, you know, for storage, and so, you know, I think that's just a bullish case. And most of the demand is not going to come from the Department of Energy. It's going to come from utility companies, all right? And already we're seeing it. France, they're going to expand their nuclear power arsenal. Japan is on the cusp of doing a 180-degree policy shift on nuclear. Yeah, Fukushima, you know, it caused all the people to go against it. But with all these high energy prices, nuclear, I mean, there's no way, okay, that you can talk about energy security and energy infrastructure without talking about nuclear, okay? You're going to need multiple energy sources. You're going to need diversified energy sources to really have a comprehensive energy security plan, all right? And so, you know, you can't just use all hydrocarbons. At some point, you're going to have to venture into other energy sources. And right now, there's nothing as efficient, pound for pound, there's nothing as efficient as nuclear. Okay, there's just nothing. So yes, there is government buying, and yes, that could be some tailwind for uranium prices, but I think a lot of the demand is going to come from utilities. All right, a lot of it is going to come from these new nuclear plants that are going to come online. I think that it probably too in the United States we're going to see more nuclear power plants being built. France already, you know, trying to expand. Germany also, you know, is they stopped decommissioning their nuclear power plants. They're keeping 2 of them open just in case. They call it, just in case if we see something bad happening over the winter. They're keeping 2 open. I think that in the end they're going to keep them open indefinitely. You know, Japan, South Korea also is doing a 180-degree policy shift on uranium. A lot of countries, I think, are going to get friendly on nuclear power just because of the way things are. And also, too, if this Ukraine-Russia conflict drags on, which I think it will, that I think will even put even more tailwind on uranium prices as well too, just because, you know, there's no natural gas will go up because of that, hydrocarbon fuels will go up because of that. China reopening also will put some pricing pressure on hydrocarbons, coal, natural gas, oil. You know, they're gonna need that for their reopening. So again, nuclear just becomes more and more favorable. I mean, I think uranium prices could go up another 20-30%, and it would still be economically, beneficial to use nuclear power over some of the other sources that we have. So again, I think this is just even more bullishness. Yes, so the Fed government is buying uranium, but again, I think most of it is going to come from utility companies. I hope that answers your question, Ari. I know I just went on and on about uranium because I'm very bullish on it. I'm very bullish on nuclear, and you know, just as an energy science, there's just nothing as efficient in today's technology that is cost effective. Okay, it really isn't. Everybody's talking about solar and wind. I mean, yes, they are viable at some point. I'm sure when costs come down, they can be viable, but still, it's just you just don't get as much out of it as you can with like a nuclear power plant. All right. And with the costs, there's a lot of maintenance that happens with wind and with water energy. It's a lot of maintenance. Water right now, actually in China, there was a problem with water energy because of all the droughts, because of all this, climate change. A lot of their hydroelectric dams dried up, and they had sections of industrial areas they had to close down because they didn't have enough power to run them when there was all these droughts. So again, it's just not as efficient. It's not as reliable. Okay, nothing is as reliable and as cheap and as efficient as nuclear with today's technology. There's just nothing out there. Okay, so I think the energy of the quote unquote future will be nuclear. And also, natural gas. Natural gas will, also I think its usage will also increase as well too. So I'm going to also be looking for pure natural gas plays as well, some natural gas exploration companies. So that's my next thing that I might be looking at. But right now I don't have any names to add, at least in that space. I haven't seen anything compelling as of yet, but that may change in the weeks to come. Anything else you guys want to look at? Going once, going twice. All right, then. In that case, we will wrap up our session of the Morning Market Memo. Our Discord invitation link is in the description below. Come join our Discord. Be a part of our growing community. There's no sub fees. There's no paywalls. It's of the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, and comment. Show us some love, baby. All right, I'll be back on tomorrow, Wednesday, 10 o'clock. Eastern time, 30 minutes after the opening bell of the New York Stock Exchange. We will not have a morning market memo on Thursday because Thursday's Thanksgiving. The market will be closed. So this week will only be 2 sessions. So if you guys have any questions or anything you guys want me to look at, send me a message, DM me, put a note on Discord, and I'll try to cover it in tomorrow's call. Hope to see you guys then. Have a wonderful day.